In a decentralized finance protocol, users can earn high returns by staking and lending assets, which is why yield farming plays a crucial role. By lending your assets to other people and receiving high interest back, you can earn passive income. With ALF protocol, we want to take things a step further by using leverage to create something much more significant than what you can imagine. It's nice to see you again, people of the internet, and welcome to another video from the website, where we bring you the latest cryptocurrency news and information. This video will discuss price predictions, but is more of an educational video than a price prediction. In this video, we do not offer financial advice and we are not financial experts, so please do some additional research after watching. Now that we've got that out of the way, let's watch the video. To give you a bit more information about the protocol, it's based on the Solana blockchain. This group of protocols is designed to provide capital to investors and traders so that liquidity can be maximized. They make use of their capital by doing yield farming and providing liquidity to various pools. Moreover, yield farming is possible here with a 200x leverage. If you don't know what leverage is, it is the ability to borrow money to invest more money than what you already have. It allows investors to make high-risk, high-reward plays as they can earn a lot more money but also lose their investments much quicker. It is a simple contribution for DeFi, but there is more to it. DeFi is currently in its second generation. This brings us token incentives for yield farming, margin trading, leverage positions, and liquidity provision, which DeFi provided in its first generation. They aim to be the bridge between the second and third parties by leveraging the AMMs on the Solana blockchain. This team, led by Matas Socianas, has a lot on its agenda. There is a lot of transparency between the people on the project and the leaders because they communicate via social media and other means. Regardless of the success or failure of the protocol, they want to be held accountable. This protocol has attracted numerous investors who have put their trust in it. The partnerships that they have formed will serve to drive the future development of the protocol. The following is a list of some of the investors and partners they have formed. As liquidity providers, the strategic partnerships they have made will boost the protocol and improve where they are lacking. It will increase the value of the entire network. There are a lot of goals in the protocol, and one is to implement what was discussed in the video before. Their ultimate goal is to make capital work more efficiently for people. A protocol is designed to connect low-risk investors with riskier investors in the stock market under the capital efficiency method. This involves dividing the average value of output by the average rate of expenditure over time. This is provided by a group of protocols that connect traders with different risk appetites in order to maximize capital efficiency. Thus, this will help yield farming in Solana to be more profitable by giving higher yields, lower rates for lending, lower margin requirements, a lower risk of liquidating, and a lower risk of permanent loss. Despite being a group of protocols, they are not independent and are interconnected. A network of people is connected to make things happen. According to the official white paper for the ALF protocol, there are also alphas and allotments that LPs use in their investments. All of their actions in the protocol take place through ALF liquidity, which allows borrowing, tracking position health, and keeping collateral in custody. In the leverage protocol, users can take leverage in a variety of positions and still maintain a balance in the system. These protocols, along with several others, work together to reward participants, share liquid, and maintain the system. The protocol allows different types of users to interact with it, each with their own functions, and this is critical to the success of a functioning system. Risk-averse investors are the first type of end user. There are two types of risk-averse investors in this place. In addition to the LPs who wish to add money to pools, borrowers who wish to borrow additional working capital from the ALF by using their assets as collateral are the second type of users. Lastly, there are risk-seeking investors who prefer to take advantage of leverage and invest their funds in other pools in order to earn as much return as possible. In the last category, we have the arbitrager, who seeks to make money through liquidations and contributes to the efficiency of the system. In terms of tokenomics, the protocol isn't based on a coin, so they do not have their own coin. However, they do have their own token, but it isn't used for trading. Because they are based on Solana, one of the largest blocks out there, the safety of your money is assured. Therefore, there are people who don't have their own currency, but keep that in mind. There are three functions attached to the ALF token. The coin's first function is to govern the network. If you stake some of the ALF, you can vote on proposals similar to the use of treasury funds, as well as what the inflation rate shall be. ALF rewards its participants when they lend money to other people. People can be rewarded by a percentage because they lent their money to pools and let it be used as leverage in protocols. The tier system indicates how many tokens you have staked. The more ALF you take, the more leverage you have. Other rewards follow this as well. The value of assets being transacted in the protocol can be increased by burning the token and buying it back. The developers of the protocol are transparent about where the token is used. They wrote it so that it would be clear how much was allocated to each sector. There is only 2% allocated for public sale, which is lower than what other people want. 15% of the token is given as a reward for staking. Over $5 million have been raised and are ready to be deployed so far, as the total token supply is estimated to be more than 10 billion. Several future plans have been released so far, and they are already looking stacked for the year 2022. They plan to release the public IDO, the DEX listing, and the ALF lending system in the first quarter of 2022. A number of upcoming products will be introduced by the end of 2022. A dashboard for trading strategies is expected to be available in the third quarter of 2022. Before the end of the year, they plan to use their leverage system in other chains. They also plan to have a total value of $500 million locked up before the year ends and will release an option hedge strategy. The increased leverage of Solana's ALF protocol will have an instrumental role to play in how future developments will be made. We want to know how many people will benefit from it. They are not done yet, no. They have a box full of surprises that will take the market by storm. Thank you for watching. Hey, you made it this far into the video, so be sure to leave a like if you want to support the channel. If you subscribe to our channel, you will not miss an uploaded video like the one about Harmony 1. If you enjoyed the video, make sure to subscribe and comment below with your thoughts on the video for a chance to win a shout-out. Once again, thank you so much for watching and have fun cashing out.